Yo, yo, what up? So we'll get started really quickly here. I want to give just a couple of seconds for people to join. All right. But all right, looks like we have 5, so that should be enough. So I said the daily bias out this morning. If you saw into the chat, obviously I said very briefly, same bias as yesterday. We'll try and do a short tape read stream once things clear up. So those relative equal highs that we talked about yesterday, previous weekly high up here, that was our draw for this week. All right, and still acting as that draw. We had no signatures Monday or Tuesday that bias would be incorrect, and not even with the pre-market today that we have a change in bias. So that continues to be where I likely will see, or I'd like to see where the market's going to draw to. So bullish bias for the morning. Now 9:30 is immediately digging into a premium array. So you need to be identifying where the likely retracement is going to happen. But then dealing range between here and that swing high that formed, we have a very deep discount gap. You also have this you could be marking out. You also have on the 15-minute chart this fair value gap here narrowed down. So either of these discount arrays would all work, right? And be of interest basically for a discount retracement. So when price is immediately at 9:30 running into that premium array and dropping back down, you have to look at, obviously, okay, what discount array does it want to reach for? And that was kind of what we talked about yesterday through the predictions chat, and hopefully you were following along there. As dropping into it, you obviously are starting to watch for 5-minute PD arrays to hold and things like that, but also for our 1-minute signatures to also be the same. So as 9:30 opens up and you have two ends of the range being formed during the opening range, this is where price can get tricky, but it should, to be honest, be very easy for you to identify kind of what's going on here. So if you're bullish or you're bearish, whatever, you have an opening range that does not get pierced through, meaning your first 30 minutes, that window that's timed. Okay, if that window high here at 9:51, that window low at 10 o'clock, either of those could be positionally where your swing high or swing low the session is going to be, right, based on your time dynamics. So you have one of two things. Either you could wait for that, obviously, to be displaced through and you take the first sibi or bisi off of that, or you wait for PD arrays to start holding, right? And what are you looking for? Excuse me, I have something in my eye. What are you looking for that's important, obviously, within that range that you can potentially then find a setup off of? So key times are going to be important, obviously, so you don't want to just be blindly taking whatever. But choppy opening range drops into discount there, and you have an SMT protected low as well. As you can see between ES, YM, and NASDAQ here, if I zoom in. Okay, that's not really super important, but it's just more of a confirmation for you to be able to identify what's going on. So between 10 o'clock there and the 9:30 swing low, SMT across the averages. And you also have, okay, this run down here, trades up, runs down again, trades off again. This here, okay, this entire gap is will be in this case, a inefficiency. It's leaving this balanced price range we just worked through and trading out of that short-term balanced price range. So this is seen as more inefficient than something like this, right? Or even something like this. So we draw that out. So reclaimed bisi. All right, and when you see price kind of staying within this and not willing to drop down, right? Do you see any displacement on this leg here? You see one tiny gap, okay? You see another tiny gap in here? No. So within your opening range, you have an ideal low being placed and potentially also an ideal high. Obviously, you have high resistance there. And PDR signatures that are kind of bouncing back and forth. So the best thing you can do is to be waiting for displacement. Obviously, outside of that consolidation range, you just simply just draw a range high and a range low and wait for it to break out, towards your bias, obviously. Or you want to be looking for PDRs that are the signatures in there that are more advanced. So things like reclaimed bisi being used. All of the information and price should be things you're gathering. So in here, say you're still bullish. As it's running away like this, the lack of inefficiencies and lots of wicks should be showing you it does not want to displace and reach down to that Asian session low, right? It's also not clearing and starting to hold bearish order blocks the way that you really want them to be used. So it's, it's shallowly taking out these swing lows, and then immediately at 1026 you see a reaction off, forming a gap there. It's still within this balanced price range, so you're still looking to see how this wants to be held. But more importantly, you have that inefficiency that we talked about before that you would have marked out and see as all these candles are reacting to it. You would still want to take that and drag that out. And price forms a gap on top of the reclaimed bisi and tags into it. And now with a bullish order block, this can be something of interest. Okay. So as well as we're leaving it inefficiency in here, we're looking for now support off the order block. So there's different things in a choppier day that you want to be studying, and patience is really the most important thing. So if you do not feel inclined to take a setup, or if PD rates are not holding the way you'd want them to be, or it's it's just looking funky, then your best thing is to wait. Okay, waiting for price action to print what it wants to do and give you an obvious idea of where it would likely draw to next. Okay, so you have a run here on the short-term swing low, and I'm looking for it to now expand, preferably off of this. And if it stays in this consolidation range, it's not too big of a deal. I want to see, my main interest right now is the 1050 macro. So the last ditch macro, do you see any entry in here that's being offered as a range expansion? You don't really, right? It's between 9:30 and 11 o'clock, or right now, but we're staying within this kind of ideal range of price action. So the last ditch macro has its name. If you do not see any of those, previous entries being offered really high quality, then you look for the last ditch macro as your last opportunity really before it gives you that range expansion. There's obviously trades outside of that you can take, but we're talking about trying to capture just this 9:30 to 11 o'clock window, or whatever entry is being offered, in this case during the New York session. That's really the last opportunity that you'd be hunting to see if you can get that. As you get further and further into the day, then you're trying to capture more of that lunch move or entire daily move. So, it becomes completely different, I think, on how you maybe approach targets. So took a long at 946 with price tapping first presentation fair value gap, and stop loss was below the 938 low. Anything that I should have done differently? Okay, let's look up 946. Okay, tapping into first presentation fair value gap. I mean, so you have a couple of things, right? You have the 938 swing low. You have no higher time frame PD rate being tagged 930 onwards, or even before that. So if you don't have manipulation going into the session, you have to be waiting for 10 a.m. So here at 7 a.m. you do run out the swing low, but since you have, let me pull the economic calendar. Since you have no high impact, I don't think we have. Do we have 8:30 news? We have unemployment claims. So you're looking right here. You're looking preferably between 8:30 onwards, right? 8:30, 9:30, 10 o'clock as your key times for that manipulation to form. So it's one of those ideas that, okay, maybe it might have worked, unless you saw some sort of crazy SMT here. You don't have a higher time frame PD array being tagged into, especially after we're running a premium array like this. Premium buy size, the current daily high. You have to be watching for a potential retracement off of those PD arrays. As soon as this is where you see double Judas swings and things like that. So on a 1 minute chart, you have the signature, right? You have an IFVG. If you trade IFVGs, this is your model. If you don't trade IFVGs, trading off of this 946 leg, I would say is quite difficult to do in the beginning, to repeatedly do that and repeatedly trust that. So I would say maybe look at maybe not using FP, FVG inversion as your only model. If it's not your only model, then that's perfectly fine. Right. Counting on 7 a.m. sweep, 1 hour fair value gap, midnight opening price as the manipulation. So you're looking at right at 7 a.m. into that sell side IC. Yeah, I mean, it's a high quality setup based off of that, right? It's more conditions of what you see. So when I open this up and I look at midnight, to me, it's not clearly one-sided. Just looking just the daily profile, looking at the daily price action. When we look at obviously everything included from Monday to Tuesday, I think it's one-sided. When you look at it like this, and no displacement off of this, right? So you could say this is manipulation. If this is manipulation, this is the low of the day or low of the session or whatever. I want to see displacement, preferably outside the top of that SISD or that shift, right? In some sort of gap being formed here. When you don't see fair value gaps being printed here, and then it's immediately running out of premium array, are you going to see it use, the top portion of this? Most likely, no, because there's no high quality order block plus inefficiency it's going to tag into and then leave. So in this case, that's why you have it dropping all the way back down to discount here. And like I said, you could either use this 15-minute gap as your discount PD rate. You could use the 1 hour gap as trading into. Either way. Yeah. It was just an entry I could get after I had my bias. Exactly. Right. Then I think, yeah. It's one of those ones where in the beginning, it mechanically it fits. But when you look at all things as a whole, I think it's more challenging to frame this as a hike. And even, I mean, it still is obviously holding you a premium run. But you're probably not looking to take partials above this swing high. You're looking probably to trim stop or something. So it's one of those trades, I think, that helps you build your edge. So the more you practice it, the more you know, okay, why this one doesn't work, why this one does work. Because in reality, on a 1 minute time frame, that's the signature you'd probably be looking for. But you're missing other things like 15-minute PD array, 15-minute order flow holding your idea, and as to why this would be the low of the session at 938. Right? If I want to take longs, I have to assume that the low of the session has been put in. If I'm going short, I want to assume that the high of the session has been putting in, because you may have the correct bias, then does this. Drops again into discount, and then even in here, right? As you're taking long, some of these are going to get stopped out as it's leaving. So you have this case, hopefully that makes sense. If you got any more questions, let me know. In this case, you have prior to the macro time, it running that swing low, down into the order block, down into the reclaimed bisi we talked about before. Okay, and now it's starting to leave. You have an inefficiency here, not inefficient, but fair value gap. Fair value gap forming in here, comes down, immediate rebalances back into it. And now you have a short-term change in the state of delivery here. You're going to be watching to see if this consecutive order block range now wants to hold. So preferably, you would not see it run actually below this swing low here. Okay, although it's not an intermediate term low yet, what we've done is we're looking at the price action as a whole. So it tagging into reclaimed fair value gap here with a short-term low to the left of it, short-term low to the right of it. Probably this makes this a long-term low in terms of the 1 minute chart, or even an intermediate term low. Okay, then when you have an immediate rebalance here, and now displacement out the top of this down closing candle range, this would become a high probability order block as it's leading price into that discount array. So this is meaningful in some manner, right? It's a meaningful order block of prices, and as it trades up above that, it does want to come back down into that range. So you're wanting to watch how this, even as this reclaimed bisi, and even this as well. You don't have to mark all these things out, but I'm just drawing your attention to different PD rays you could be marking out. My attention is mostly just in this, right? That are going to start to hold price action up. You don't really want to see a huge amount of resistance from this. Okay, you can mark this out as an IFVG if you want to, as it was reacted here on the sell side of the curve. So that makes this a proper IFVG, or one way of grading a proper IFVG is to look at, obviously, the reaction on the left side of the curve. So as it's trading at a premium here, you can see the imbalance section of it, and price action stopping within the imbalance section. And now it's allowed to turn back into discount. So premium array, you have parent dealing range here, challenge dealing range here. So at a minimum, you'd like to see it drop into 25,224.75. Okay, so a little bit, maybe a little bit more. And then obviously the parent dealing range would be there. So I'm going to screenshot this, put it into the predictions chat. Yes, and trades. Do you count out M5 SysD as an important factor before taking an M1 trade? Absolutely. When I was teaching the ATM model back in 2024, which is kind of like ATM model is like a bread and butter. If you wanted the least amount of complicated mechanics and the easiest, mechanical kind of setup, that's what that model is. And it talks about having, if you want to take a 1 minute setup, a 1 minute entry, you need to have some sort of 5-minute confirmation reversal, right? So that is basically just saying that the 5-minute order flow is in line with where my drawn liquidity is, and now I can start to trust 1-minute PD raise. All right. If that's the case, you don't just need a SysD, or you don't always need just a SysD. You can use in terms of order of significance, a market structure shift, change the state delivery, or an inversion of your value gap. All of these are signatures showing you that market structure and somehow is breaking. And now we're flipping into a buy program for this case, right? And now you can start to trust 1-minute PD raise. So if you're struggling on which 1-minute gap is going to hold or which one am I going to use, that obviously takes experience in knowing that. So don't expect to just know what 1-minute PD ray or fair value gap or order block you're going to mark out and it's going to be the right one, you know. But a very good filter, and you could ask other people in the chat. I know Prod B also uses that same kind of mechanic. I know many people use that because it's a very insightful filter that keeps you safe from taking bad trades where, you know, you take a 1-minute setup, it gets stopped out, and then immediately 2 minutes after that, the next fair value gap on a 1-minute chart just sends it. Right. So those are useful tools to know. And obviously, as it's trading up here, this, you know, would be on this case. You can see on the 5-minute chart here. No long opportunities would have been available up until the 1030 candle, basically. Right. That's a shift. It's also a change in state delivery. And that would make it so any 1-minute PD raise after that, you could start to hold. Obviously, in relation to time, in relation to dealing ranges and stuff, you can't just buy off of any 1-minute gap. But if you got a solid entry model looking for discount or whatever, then you should be okay. So you have a second change in state delivery here, right? And I would prefer also if the price action in this case stays within the IFVG, the candle bodies at least stay within the IFVG, but it doesn't and it wants to come back into discount. It's not the end of the world. And as soon as we take out, we do have a gap here. Okay. Now you can mark this out as an IFVG. That's perfectly fine. Now the way that I look at it more is a breakaway gap, because on the way down on the sell side of this curve here, it was never reused as a sell side opportunity into the discount of the dealing range. So you would normally grade this as a breakaway gap. And then breakaway gaps typically do not create these huge discount retracements. So if you're trading through a breakaway gap, let's say our drawn liquidity is up here, which it is, right? Our short-term draw, our long-term draw is up to this buy side. This will not create huge discount retracements. So you want to see very little reaction coming out of there. All right. And then for the last manipulation leg, you could mark it here for here. This would be like your 9:30 manipulation leg. Now, I think this is kind of funky when you look at this. All right. So I would maybe go back to the 7 a.m. one. You could argue maybe this one. -2, -2.5, boom, and then -4, 4.5. I think that one makes a bit more sense, right? So you can put a position up there, you know, maybe a runner, see what it lines up with, go to the 1-hour chart, what you got. You don't really got any more inefficient sections in here. You can maybe target CE of that. 4-hour, nothing, daily. Yeah, you just got daily CE. So, you know, if we wanted to extend that out, we could and use that as a projection. Oh, crap. I don't know if I'm supposed to have set on or no. I forget. Anyways. Okay. You can start to see if that -4, -4.5 is around 25% of it. So we can maybe use this as like a extended target. But now that we've given that SysD and it's displacing up through this breakaway gap here, do you expect it to come back to this low? No. Do you expect it to come back into the order block here? Probably not. Would you even expect it to take a 1053 swing low? Probably not. So I'm going to pull up the setup here. I took it off the same exact logic that I just talked about, which is buying it off of the reclaim bisi. And as it drops back into that again, reclaim bisi. So my stop here needs to be moved. Okay, can just take a partial off at the sell at the buy side. The remaining 4 contracts, I guess. And you know what? We'll jam one up here just for the fun of it. And we'll sell another 3 right there. Right now, so we have a couple of things, right? First of all, look at the time of day. Okay, it's approaching 11 o'clock. When are we supposed to see our new high of the session form? Post 10:30, probably between 10:30 and 11 o'clock. So the best case scenario is you see this last 1 minute candle pop up aggressively, take out that swing high, and there's your time dynamics working in real time. And then obviously at this point, you're looking at the daily profile. Let's go to the 15-minute chart. Our swing low here is placed during the New York session of the day, right? This is our daily start. Okay, so this is our day. Our low is formed here at 7 a.m. So our most reasonable, since this is formed during the New York open session, let me do this. No, this. Nope. This. Yes. During the New York open session, our high has to be formed what time? London close. Preferably closer to 12 o'clock because our low of the day here is formed during the New York open session. You got the PDF, you know kind of how to mathematically determine that, but I'm not going to get too far into it. We're just looking for preferably a new high post noon, obviously in combination with the 10:30 high. So you look to see if this last 17 seconds can give us that run up higher, and you have perfect kind of time symmetrical price action coming on. Even if it doesn't, it's not the end of the world. You're looking for an expansion up at least to that daily buy side. So it falls 1 minute short. And look how this breakaway gap here doesn't cause, once it starts to get through, doesn't see it. Actually, this one here does cause a discount retracement. So this would be something of interest as to why this maybe isn't completely a breakaway gap. Still the first premium imbalance, so I guess that's something to be mindful of. You know, it's, you look at this dealing range here, it's the second one, I guess. Yeah, the second one. So it's really the only premium array past the swing high. So maybe that's why, as to why it didn't do exactly that typical breakaway signature, but either way. And then once this high is ran out, you'll have a new dealing range there, right? And now preferably you'd be looking for bisis for price to drop into. So bisi here would be of interest because you have a order block plus a bisi plus obviously the IFVG. You really wouldn't want it to come down into this here or this volume bounce here. I mean, I guess you could allow that. But once it takes that swing high, I'll probably be trimming to the 1053 swing low. And then that'll be that. And then you also have to consider the possibility that on a 5-minute chart as well, you now have what? A low, high, lower low, tags into higher time frame PD rate, right? The 15-minute gap. What would make this last two up closing candles when you have a gap form here? Right, well, these last two up candles, if you cut these through and you have a gap here and it trades into that gap, what is that? Can you show me one more time where you marked the current range and also the discount arrays price hit as a manipulation? Yeah, of course. And there's your first partial order filled. In fact, I'm gonna screenshot this. We'll put it into the stream trades for now. So you're looking for, and correct, yeah, it is a breaker, right? So there's your daily profile, right? Swing high, form post 10 a.m. then into London close. So your daily profile, whenever daily profile is, New York open reversal. So when I'm looking at where my discount PDs are going to be sector, it's going to be, you know, when 9:30 starts, it has a look back. Okay, if I'm bullish, you know, if I'm bearish or whatever, let's just say in general purposes, obviously this is not going to be an everyday thing, but let's say just for high quality moves. At 9:30, we look back at the most recent 15-minute or 1-hour dealing range. The reason we use those two is because the 15-minute chart is directly paired to session highs and lows. The 1-hour chart is directly paired to daily highs and lows. So if you're looking for a specific time frame for those specific signatures to form, there you go. Second thing is obviously when I have a range formed at a potential daily low to that swing high, whatever that is, that becomes the dealing range that I would expect that 9:30 to use. So when 9:30 hits, it's going to look for the first 15-minute gap or 15-minute swing low. You know, that price can come out and sweep and it be used as that discount entry. So that's why I kind of gave different examples here. You could obviously be using this one. That'd be your first discount PD rate. You look to see, okay, just want to trade into that and tag it. It overshoots it a little bit. So whether or not you deem that to be important is up to you. It's obviously with the candle bodies you're holding there, so you have just slight wicks doing the damage. You could use this one, and this is where you have to allow variance at 9:30. You're not going to be able to nail exactly what low PD it's going to use. Sometimes you're going to miss things like this, or you could use maybe this 15-minute gap. I don't really like using this one as much, just because I think it's a little bit more cherry picked for me personally. I'm probably not going to see this gap and extend it out and use it as a reclaimed bisi. So I think that's a little bit more cherry picked for the situation. I can be able to see that in real time. 70% of the time, most likely not. So I'm going to draw my gap, this one, or the hourly gap that it's trading into would be this one, right? Either of those, those are, it doesn't matter specifically which one you use unless you want to get technical about it. But this would be the most recent dealing range trading into it. And then you look at yesterday, for example, okay? Yesterday has a much higher time frame dealing range on the 1 hour chart. Also, we were bullish, but we have not formed the low of the day yet. So it cannot be, I mean, it could, but you're not looking for a 15-minute PDR. You're not looking for a 4-hour PDR. You're specifically looking for a 1 hour discount imbalance. So a 1 hour discount imbalance relative to that dealing range going into yesterday would have been this low to this high. First gap in discount, that's your PD rate. That's the one that I marked out yesterday in predictions chat and in the daily bias as to what the two PDRs I were looking for. Took eventually the entire day for it to run out the previous daily high and the current daily high, all until noon, but bias was correct. So it takes practice, obviously, to do so and mark it out correctly. But once you kind of get the hang of it, I don't think it's too challenging. Here's your -4.5 PD rate. I don't know why I didn't see this before. I must be blind. This is what I want. I don't want this. Let me do. So the reason I'm moving it here is this is the previous weekly high. I thought for some reason this was the high. I'm not reading it properly. And this is obviously marked up with -4, -4.5. So we're going to just close this out. Oh my gosh. Okay, sorry. A little freak out there. Okay, now this is better, way better. I was like, what is this lining up with? But yeah, this is not the current previous weekly high. This is still a buy side pull, and you're probably going to see a reaction off of it because it's a swing high inside of that gap. So I'm still going to take something off there, but this is the previous weekly high. So that's what I want to be shooting for. There you go. And obviously, I am more concerned with, there's a couple of things that should make it so that my final partial here is hit. Okay, we have a couple of things. It's going to have a little bit of resistance, I understand, because the fact that it's trading up into a daily gap, which is this gray shaded box here. Okay, that daily gap going to be something of interest, right? It did trade into it multiple times, so you're really looking at, okay, that inefficient section of that gap is going to be the most sensitive. So this portion up here, this is going to be the most sensitive area where you're probably going to see a retracement off of it, but we're still inside that gap. So what are the things that are going to help me confidently hold this trade? Okay, number one, let's make this smaller. I don't know why. I think it was on the stream one time. Number one, we have, first of all, limit orders over stop loss. It's a concept that you have to study and a concept you have to apply and lose at and fail at multiple times until you're confidently feeling like this, which is when you're managing a setup, managing a trade, you cannot be concerned with your stop loss too much. Beginning of the trade, fine, right? You want to put your stop loss in the proper position. You're worried a couple of seconds, is it going to be hit? Okay. Any decent trader who's been trading probably for more than a year, you'll understand when you're probably going to get stopped out and when you're not going to get stopped out. You have maybe a 10-minute window as to when, normally, or at least for me, if I am in a losing trade, it'll take about 10 minutes or less for me to lose. It's just how it is. And if I'm right, and it starts moving in my direction, I kind of know, okay, I'm likely this to be a winning trade. And your first order of business at that point is not to jam your stop loss. It's not to protect your position. If you're doing that, you're not accustomed to the risk size. You're using way too big risk. You're probably trading the P&L, trying to get out a drawdown or do something probably stupid, and you're constantly trimming your stop to protect it. That's one situation. So other situations, you probably have some mental problems that are keeping you from trusting yourself and your own performance. That's a whole different issue. But it all culminates to the idea that you need to be more focused on your limit orders being filled and where price action is going and what it's doing than looking at this. If you've been looking at this number any more than about 10 seconds this entire stream, you're probably more focused on the stop loss, or you're going to be more focused on the stop loss because you're concerned with the P&L. I'm focused on, okay, are each signatures and price showing me that my bias is going to be, filled out? And in here you see a very premium array, price wicking into it. I don't need to see it hold right now completely, but that by itself is showing me it's not going to just completely reverse and stop me out. So number one is make sure stop loss is obviously this is a point of invalidation, and it's a point where I'm protecting my profit. Okay. So limit orders over stop loss. I want to make sure that these are getting filled more than this is at a perfect position, right? If I'm so concerned with an IJMA right here, that's not really going to be very helpful for me, is it? If I want my entire runners to go. So that's what we're focused on. Number two, over business is obviously the 5-minute order flow. So when I look at the 5-minute here, this is exactly, I had to ask you that question. What is this gap going to be when it's paired with the low, high, lower, low order block? That is a unicorn setup here and here. So if you look at where my stop loss is on a 5-minute chart, it is below gap number 1, gap number 2, breaker, and below mean threshold of the order block here as well. So there's absolutely no reason as to why my stop loss should be hit unless my idea is wrong or I timed it wrong or whatever. So another thing, right? 5-minute order flow, that's what you should be studying. Obviously, stop placements, if you're trying to hold for an entire daily range or more than just a session range, your stop loss should be based on a 5-minute and not on a 1-minute chart. Number 3, time of day. So I'm still expecting that my DOT for today is 12 onwards, right? We're inside London close, but preferably 12 onwards, okay? And that's even more beneficial because I have day, week, and session full alignment, and also our weekly objective rests at the previous weekly high, or what I expect to be the weekly objective, and I'm hoping to be the weekly objective, of course. So we have this alignment of time, of price, and then obviously just continuously understanding how time of retracements are going to occur. So the best thing you can do when you're holding a longer position is, and this is not even that crazy, this should really be filled out by 1 o'clock or before then, is to time when the retracements are going to happen. So if I'm getting in on a trade at 10:50, what's the first order of business that I could see it, obviously after it gives me an entry, where I could see a retracement or potentially a stop hunt, where if I'm managing my position too tightly, I'm going to get stopped out. I need to think ahead. So 11:30, right? 11:30 to be the lunch macro. It starts the lunch macro run on stops. So depending on where lunch will go, typically you'll have a run on stops opposing that lunch move starting at 11:30. It seeks liquidity generated during the 10 o'clock to 11 o'clock phase, or really any swing low or swing high that's generated before then. It hunts those type of stops. So if I'm expecting bullish price action, preferably from 12 onwards, these swing lows, as they're being formed, are potential runouts for the 11:30 lunch macro run on stops. So if I'm managing a position that's likely to go longer in time and price, that's something I need to be careful of, where even if I'm not aware of that, maybe at 10:27, I may move it to that intermediate term swing low. Oh, it formed an intermediate term swing low. I should be good to go. Is that the rule of thumb, I guess? So if you're trimming stop and you're not paying attention to the time of day, that's what's going to happen to you. I normally, on these kind of positions, if you're holding something and you want the confidence to hold, obviously these things are going to be helpful. So time of day, price, right? Focusing more on this than the stop loss, and understanding the time of retracements. At that point, put your stop loss in an area that is protected. And then maybe once it tags, this premium array, I may trim it again. But after that, I'm not going to be at the charts trimming it over and over and over again. You just set it there, leave it, and you can set alarms on TradingView or whatever platform you use, and kind of determine when that's going to be filled or not be filled. Easy peasy. So I guess the fifth rule here is practice small. So if you want to get good at holding runners, and if you want to get kind of past that mental block of 2 to 1, because for a very long time I thought 2.5 to 1 was like the peak of my existence. I was like, if I can, which I mean, to be honest, it's profitable, so there's nothing wrong with that. But I thought 2.5R consistently every trade was a very challenging thing to do, because I just didn't see enough opportunity. And as I grew as a trader, I obviously understood how to place my stop loss better and what targets I want better. So that RR moved on both ends, right? It moved from the stop loss perspective and from this perspective, so it increased. But you have to practice small. So I'm always going to take partials. Doesn't matter how big my position size is, I'm always going to take partials. I'm always going to be leaving a gradient of limits for it to fill. I'm always going to be managing my stop loss. But in the beginning, you know, the practice of just putting one partial here and one full pull here, that little uncomfortable amount of time from here to here that you have to sit through is just pain. It's just pain tolerance, really. Like holding runners and things like that. It's just pain tolerance until the point where you don't care. So you have to, in some way, break the muscle down, which in this case is your brain and your psychology. Break the muscle down. So you start with 5 pounds. You start with a little move from here to here. Then you start from here, partial to here. Then you go from here to full pull. Then you go from here, partial, partial, full pull, or whatever you decide to be the rules, right? And then obviously, I guess the last rule will be protocols. So you know when to take partials, know when to aggressively take partials, and know when to take full TP. Okay, when I'm scalping, when it's low probability, I'm taking aggressive partials and less so emphasis on mid full TP hitting. When I believe there's a higher probability in all these things lining up, I'm placing more emphasis on my full TP hitting, as you see here, and less emphasis on my partials. One off here, majority of it up here. Vice versa, I would have maybe 2 off here, 2 off here, 1 off here, or maybe 3, 2, 1, or 4, 1, 1. It could be whatever. But that's kind of what I would be focusing on. So then that way, obviously, based on the price action that I'm seeing, I'm not doing myself a disservice by expecting to go all the way to my take profit or all the way to -4, because sometimes you're just going to get a tiny run and it hits your premium array and you're like, why didn't I just take partials there? Remove a lot of that mental blockage by just having protocols in place for knowing when to do what thing and in what situation. So I'll screenshot this and I'll put this in this chat here if you want to kind of go through it again the second time. But that is the kind of skill. And you can see price action, how it's stalling out in here, right? You're seeing this reaction out of the gap like we were expecting. Stop loss is still in a place of invalidation for longs. And clearly in discount of the parent dealing range here. So if it really wants to cut into discount, we got arrays that should be holding. It shouldn't want to come all the way back down to that swing low. That's my logic behind it. Going forward into November, December, should we wait for last ditch macro? I don't think that's the best thing to do, because last ditch macro is going to be, it's called last ditch macro for the reason of this, which is when you don't have any range expansion for the first 30 to hour of price action, the last ditch is going to be used. Now, that does not mean that every single day that is low probability the last ditch is going to be used. Sometimes you have an early move, like on a swing to Z day, right? You favor the early move, taking a trade on the early move, and then probably sitting out the rest of the time, even during the last ditch macro, because it can be in consolidation still. So the times that I'm favoring that last ditch in here is a couple of situations, preferably continuation. Okay, anytime I'm trading the last ditch macro, it's preferably a continuation. If it's not a continuation, now that can be a continuation like this, where it's offering you, still more of that move, or it could be a continuation like you see me take before a couple of weeks ago, where it's just these tiny scalps towards the range. Now, that being said, when I'm taking those continuation trades or those tiny scalps, a lot of the times there's better entries before that. So I wouldn't say trade the last ditch macro on those days, because actually it's probably better for you to take a setup earlier. The times that the last ditch macro are going to be reversing are on key news drivers typically. The the one that you most commonly see that you could blindly say trade the 1050 macro is when Powell is speaking at 10 a.m. or Trump is speaking at 10 a.m. If I see that on the news board, there's literally no thought process that has to go through my brain. Immediately, I know, sleep in that day, trade the last ditch macro. You could even trade into 11 o'clock, like 11:30. So trading a 1050 macro reversal is less common. And normally that's not really the trade that you're looking for. So to kind of summarize, I don't really think that there's any way you should be trading differently in your approach to taking setups. It should obviously be more frugal, so you shouldn't be taking as many aggressive setups. Be slightly more conservative, be slightly more patient, but then also maybe taking partials more aggressively. That's the way that I'm going to be trading in December. I don't really change up the way I trade. I'll be probably scalping a little bit more, but it really won't be like if you honestly can look at this price action that you see today and understand it, doesn't mean you have to take a winning trade. But if you understand, okay, this is where I should have waited, this is where I should have gotten out, you really won't see any more difficult price action than what you see here. There may be a few days in December here and there that meet with it, but really shouldn't be anything too challenging for you. So I know we talk about December being a challenging month, same thing with August. If you were sitting here through the summer and you saw the summer price action, I arguably think that was the worst because it was unexpectedly bad, But yeah, you'd be exactly. So Maddie asked, do you adjust your targeting like taking off of rejection blocks instead of targeting swing highs, swing lows? I won't do that. I'll never really change the way that I target. It'll always be swing highs, swing lows, gaps. Because I'm still trying to target. The logic isn't going to be different, right? The logic of the session is not going to be different. It's still, when you go into December PA, the low of the session, the high of the session are still going to be, most times, following the rules that we look at, right? 15-minute PD rate, IRL, ERL, timed, whatever. That's all going to be the same. So I normally won't see, if I'm bullish and I'm looking for longs, I won't take it off the rejection block because to me, if I'm targeting that swing high and expect that to be swing high to be the session high, that's what I'm going to take off. That doesn't mean, though, I'm not going to be taking partials more aggressively. So I may be taking, that may be where I'm full pulling, but I may be taking partials off on this short-term 1-minute premium array just to do that, or taking maybe 80% off here and leaving 20% for that swing high. So the way I'm taking partials is more aggressively. Instead of 20, 20, 50 to 80, partials 20 to 50 normally, and full TP is anywhere from 50 to 80. And when I'm scalping, it's going to be more so partials 50 to 80, full TP 20 to 50. Okay, so that's the way that I'm doing it. Now, the way that the PDRs that I'm looking for are all normally the same. 15-minute swing high, swing low, 1 hour gap, whatever. But I maybe also, that may be my full TP. But then I'm going to say, I'm going to take a, 20% off here on this 5-minute swing high or 5-minute gap. I won't target rejection blocks because to me, logically, they don't fit the criteria of what I'm expecting to be the high of the session. Nor also do I see it tag into a rejection block and then have some sort of huge retracement that I'm like, yeah, I wish I had taken off the rejection block. Everyone's different, but to me, that's the kind of framework that I use, which is logically, I still want to be trading the same, just maybe more conservative in my expectations of how price is going to deliver and how fast it's going to deliver. And obviously we'll still be doing streams and mark reviews throughout those, so it won't be too complicated. But anyways, you can see in here, we're still having nice gaps forming. So it should be at least pretty clear, at least for now, that this swing high is going to be tagged. And if I want to be fancy, you want to be fancy, you probably could set an alarm for noon and wait for noon and just close out the position there, or wait till it forms a swing high. It's a very fun exercise to do. The reason I probably wasn't going to do it, I'm not going to do it here, is because we're inside of this gap. And I just want to be done with the setup and be done for the week. So, but yeah, I mean, theoretically speaking, you just set an alarm. And when things are going well for you and you understand how these time and DOT works, I would encourage you to do that practice at least one time or a couple of times and just see if it's, because if you gain that amount of trust in the market there, just by doing that exercise, I think trading becomes a whole lot easier because you really trust it. You really trust the time of day to work properly and what you're targeting and things like that. And when it hits one time, you gain a whole different appreciation for DOT and how the market operates. Clearly, so I encourage you to do it once or twice at least by April. Don't do it in December, but price action maybe cleans up. You can just even 1030. Just you get into 950 macro. You think, okay, I think it's gonna still go another 200 points. Turn off the chart, set an alarm for 1030. When 1030 comes, you wait for the new swing low or swing high of the session to form. Close out the trade. Doesn't matter if it goes all the way to TP. Doesn't matter. That practice itself is very fun. So like I said, we're approaching 1030 here. So potential sweep candidates would be this swing low is a potential sweep candidate, right? And this is an example where you can be wrong and it works out for you. All right. We have to allow the possibility of this happening. If you don't allow it, you get scared, take it off, boom, there goes your money. Right? We're just being simple and crude. But I can be completely wrong about this, and I'd be actually happy if it didn't come back down and swing low. I have to allow it to do so. But if it runs up and takes out my take profit, no one's going to be arguing about that. But looking back from 11:25, we got about 5 minutes left. You're looking back at the most recent swing low idea of what it could sweep into. And also notice on the 5-minute chart, you do not have, actually you do. You have a very shallow unicorn retracement here. So technically, I guess you could look at that as there's your unicorn long, which would be this entry here. I would have liked if it came a little bit further down and even just tag into the wick here. Just slightly a bit further down, but who cares? And then if you really wanted to, you could actually project all of this last manipulation leg, because that's a breaker on the higher time frame, right? So this is a last manipulation leg in a lower time frame. That would give maybe what you'd be looking for, I guess, for the rest of the week, but challenging to tell. So we'll have to see. Anyways, so I'll screenshot this one last time, put it into predictions chat, printing nicely. Swing high, pulse 11, as expected. Final targets rest towards daily bias levels. Yeah, this is all being recorded. Don't worry. So, yeah, this could be our one shot, one kill. I know someone asked a question about that earlier. Let me see if I can go back. Do you think this can be OSAC of the week? Yeah, I think yesterday's the OSAC of the week. That's way more in line with the signatures you'd be seeing. As an OSAC opportunity. Now, the price action there is a little bit more challenging to get longs off of if you were looking at it in the session. So it's a little bit more challenging. But yeah, that would be, for studying OSAC, that would be something I'd be more inclined to say to look for. This is obviously still one shot, one kill though criteria, because it's week, day, and session alignment. Right, so you see those aligned, you see a take profit or an entry towards a swing point that hasn't been ran out yet as an expected weekly objective, then that's all you need for a one shot, one kill. And yeah, this would be, this trade itself ends up being way more than a 3-to-1, but that's like what you minimally would look for, is 3-to-1. It's about 7-to-1. So yeah, that would be OSAC requirements for sure. Yeah. So I mean, you kind of know what price action to expect here. Possibility here is that in 1 minute you come down and sweeps starts to retrace, maybe comes down to the swing low and gives us a little gap fill, and then it heads back up higher. But I would favor at this point a new daily high post noon. And obviously our DOT here is, or sorry, DOL is the buy side from last week. Whoops, what the heck did I just do? So the previous weekly high, it's a time-based array. So actually what we're targeting is not this level. It's not this time. It's actually right in here. Okay, this is where our attention should be. Let's make this a yellow. Actually, let's just do the DOT and DOL targets. All right, so now we expect price action to basically just trade up into this box. Okay, so now we have some kind of expected lines that do you want to be fun and draw it out, you know, where it could reach into. So that's what you're targeting, time onwards and price onwards, and that gives us this area that price should be targeting. All right, and you can see right on schedule at 11:30, there's your retracement starting. So the importance there of understanding retracements in relation to your draw and your entry are going to be helpful for stop losses, as we talked about. So random retracement happening here as it digs into premium, etc. So anyways, I'm going to keep my stop loss here. As soon as it fills this out, I'll be alarmed. Let me make this bang, and I'll put a stop loss alarm as well. Bang. All right, so this is all recorded. If you want to go back in, I probably will do a market review later today if time permits me, and we'll do more of a Q&A and a brief review of yesterday's price action and of today's price action. So if you have any questions on those, obviously let me know. Shoot me a DM. Reminder that the PDF will be on sale for the next 4 days, so that sale is closing soon. If you got any questions on that, you want reviews, whatever, you let me know. Obviously the concepts that we talked about today are all extrapolated on that document. But enjoy the rest of your week. We probably will not have many streams onwards, you know, as Thanksgiving, and also enjoy time with friends and family if you celebrate. Otherwise, enjoy the company that you give yourself. And until I talk to you guys, hopefully later today, have a great, a great Thanksgiving. Enjoy the relaxation away from the charts. Do not try and trade tomorrow. If you decide to trade Friday, be very careful as liquidity will be low. But yeah, be safe. Journal if you haven't already. And I will talk to you in the next one.